All right. Hi, I am Lauren Heindel, the community manager for the Punchdown, and my mission is to bring together the voices in the wine industry to support you with resources and a rich network of folks to lean on, learn from, and grow with. A little bit about my background is I worked in wine production for 5 years, and then I transitioned into wine marketing a couple of years ago when I discovered that my passion really lies in connecting with people in the industry and building community. So welcome to Expert Talks, where we dive into topics from company culture to operational excellence and financial processes that support winemakers and professionals like you to be better in your jobs. Today's topic is cost accounting concepts with Frances Spangler, and this topic will be really helpful for folks in accounting, bookkeeping, or finance roles at wineries who are looking to tackle some bigger challenges, as well as any winery owners who are looking for clear cost accounting concepts to make their books cleaner year to year. So today I'm proud to introduce you to our expert, Frances Spangler, CFO at Bricoleur Vineyards. Frances has been a huge supporter of the Punchdown and InnoVint's in-person events, so we're super excited to have you on the series today. And just a quick disclaimer, this advice is only from the perspective of Frances and is in no way should be taken as official legal advice, and this is purely from her perspective and personal experience. That being said, she has a ton of personal experience, which is why she is the expert on our Expert Talks today. Welcome, Frances. Let's start by you giving us a little bit of background about yourself and how you got here.
Hi, Lauren. I'm so happy to join you today. For the past 2 years, I've enjoyed serving as the CFO of Bricoleur Vineyards. Bricoleur is a new brand, big ambitions, rapid growth. We focus primarily on premium wine with incredible food pairings. Beautiful estate in Sonoma County. And before joining Bricoleur, I spent 2 years at Linmar Estate. Linmar is an amazing vineyard and winery, 40-year history in premium Pinot Noir, Chardonnay, primarily selling DTC. But I initially moved to Northern California 8 years ago to help build Sugarloaf Crush, which is a premium custom crush facility on the northern edge of the Sonoma Valley. And this experience, it allowed me to contribute to the development of high quality winemaking operations from its inception. I mean, literally from the concrete slab and on up. But before moving out to Northern California, before the wine industry, I spent 20 years in New York, as well as time in Boston and London. I worked at Time Inc., which is the magazine publishing subsidiary of Time Warner, as well as at Arthur Andersen, which was one of the big 5 global public accounting firms. So with that, I look forward to our conversation.
Wow, amazing. You have done it all, it sounds like. But I'm so happy to have you here with us today. And again, thank you for your time and for sharing your knowledge with us. Let's get going. Let's dive into cost accounting and start with the first question. What is it for, and what is the definition of cost accounting?
Sure. So in cost accounting, it captures wineries' total production costs by assessing the fixed and the variable costs and then applying it to the finished case goods inventory. So it's really used to capture the costs of making that bottle of wine, and then applying those costs so that they can be expensed as the wine is sold. Essentially, it's that matching of the revenue and expenses, the revenue from the sale of the bottle to the costs of making that bottle of wine. So it helps management control operations. It helps plan for the future, and it's something that is used to help make these informed business decisions that we need to manage the business. So wine actually is a little bit unique. And as I learned when I transitioned into this industry, I mean, one thing is there is less standardization, I think, than what I have seen in other industries. So for example, there's no official literature that really speaks to wine accounting. There's no GAAP guide, unlike other industries that are, let's say, highly regulated, like banking and finance, insurance, oil and gas, like some of these other areas where there's a lot that's been written of how to do it. That's not the case for wine. But ultimately, I mean, accounting concepts are the same. Cost accounting concepts, man, it's all the same across everything, and especially like if you look to the manufacturing industry, since that's ultimately what we are doing is manufacturing the wine. So really, that costing for raw materials, labor, overhead. It's the same when we're looking at grapes and winery labor and winery overhead.
Yeah.
So I think like what I found is that how to get started is that you have to be talking to others, like to the experts in the industry. So that's, the people at the firms that have wine accounting practices. So, the Moss Adams and BPM, they have people that were really helpful to me as I was getting started here, as well as just industry groups and other people that you meet and speak with in the industry. So.
Yeah, I mean, I think that speaks volumes that no matter what sector you hold in the wine industry, leaning on your community is how you will find success and feel like you have support to find answers. So great. I mean, I am aware, and I'm sure a lot of our users on the Punchdown are aware how unique the wine industry is. We always say that. We always talk about that. So what are some of the components that make up the cost of wine in particular when you're doing cost accounting?
Sure. So ultimately, it's the grapes, whether you grow them yourself or purchase them. It's the winemaking costs, again, whether you outsource to a custom crush facility or whether you have your own winery internally. It's the barrels and the other vessels, overheads, fixed and variable overheads, and then ultimately the packaging costs.
Yeah, that sounds pretty comprehensive. So let's expand on a couple of these examples. Let's take barrels versus other wine vessel storage, for example. Can you give an example of this concept and how that would affect your cost of accounting?
Sure. So barrels actually are a good example. And the issue is that barrels are typically, as well as other fixed assets, they're typically depreciated using straight line method. And that spreads the cost of that acquisition over the useful life of the asset. So, for example, if a barrel costs $1,200 and has a useful life of 4 years, here for easy math, the annual depreciation expense is $300. But that benefit that you get from a new oak barrel, the various, the flavor and complexity elements that it adds to your wine declines over time. So it's not something that is given up in a straight line fashion. You get more benefit from it in the first year when that barrel is new than you do in subsequent years. So if you think then of costing here for that, let's say in year one of that barrel. So you have the most significant impact that barrel gives to the wine in that first year. And yet you have straight line depreciation that's going to allocate that $300 to the first year. But now let's take just a little bit more math. And so if let's say that barrel is used to age 300 bottles in that first year. And so that's again, for easy math, depreciation cost per bottle is going to be $1. So you've got, because you've got more of a benefit from it in that first year, but you've got a consistent cost, you might conceptually be able to justify allocating a higher cost to that because you're going to be able to, because you're getting more value from it. Then you look to the subsequent years when you have less impact from that barrel in terms of the quality of what it gives to the wine. But you still have that same $300 per year depreciation cost and that same $1 per bottle cost per bottle that's being applied. So, ultimately you have essentially like a mismatch really between the cost and the benefit if you are depreciating on a straight line basis when the value is given in a non-straight line fashion. So it's a simple and consistent way to do it, to use that straight line impact. But if you're looking at it alone, it's not really telling you, it's not necessarily clear what it's telling you in terms of the true cost of the wine in year one versus year 4 or 5 onwards.
Wow, that's so interesting to me because it's almost like a bell curve that's all the way to the first 2 years, and then it completely drops off as you go into year 4 and 5. Yeah. So thank you for breaking that down and creating that wonderful visual picture around barrels. So let's talk about grapes. Grapes are probably the most important thing going into our costs. So can you give us an example of grapes?
Yeah, absolutely. So the complexity comes a little bit in the case of when you're farming your own grapes versus purchasing them. But so you have ultimately these farming costs. You have the cost of the land, the labor, the farming labor, fertilizers, water, all of those various inputs into the farming. And from an accounting perspective, you're going to be tracking those costs by, let's say by grape variety, by vineyard block, perhaps. And then you've got a decision when those grapes are done. Are you going to, sort of sell those grapes to yourself at a, what you deem to be a market rate, or are you going to sell them to yourself at essentially a break-even rate for the vineyard? And, and if you use a break-even rate, you're going to be ensuring that all of those costs incurred in the farming then end up being applied and captured in that bottle cost of the wine. And so, and if you're using them at an artificial rate, then you've got, you're either applying more or probably, less than it actually costs you to grow those grapes to your costing. And of course, it's more complicated because you're probably also selling grapes to others. And so you do have ways of truly having a sense of what the true market rate is for your grapes, potentially. So it's kind of a different way of thinking about it. And again, obviously, if you're growing your own grapes, it gives you from the same kind of point, which is that there's a different quality aspect. I mean, if you're growing your own grapes, you have more of those long-term costs, but you also have more control over the quality and what you're doing and how you're growing those grapes. And,
Definitely.
On the other hand, if you're buying them, it gives you more flexibility, and it's probably going to reduce your immediate labor and land expenses. And so that's again, that bit of that trade-off. And I think another aspect of how that costing can impact things is if you're looking at, for example, the price that you think that you'll be able to sell a bottle of Sauvignon Blanc for based upon your brand and your positioning, you might look at it and think, the grapes I'm growing are too expensive for me to make money on this SKU, and I'd be better off knowing that the market will pay more for those grapes then it's really makes sense for me to pay for it. So maybe even though you've been growing your own grapes, you are better off selling those grapes and buying someone else's grapes at a lower price point. Perhaps that's the kind of question that is worth asking and that cost accounting helps you think about.
Wow, that is wild. And such a great way to really look at the big picture of all of these cost levers that you can work with. I remember when we were having a preliminary conversation, you were talking about Rosé and how that's a great kind of example of another cost lever that some winemakers can use. So can you paint the picture around the best way to sort of cost Rosé out and the different options that people have?
Sure. So I think there's ultimately in thinking about, and I think I should clarify to you, I was thinking about like Rosé made with the Sangay method. And ultimately, let's say that we have a lot of Pinot Noir and we're going to be bleeding off some of that juice. Ultimately, that juice is going to go down the drain. It's not going to be literally used in the production of that. Yeah, literally, it's not going to be used in that production of that Rosé. I'm sorry, of that Pinot Noir that you're making.
Yeah.
And so if you, instead of letting that juice go down the drain, if you say, I am actually going to use that and use it for Rosé, essentially you are taking something that would have been waste and had zero value. And you're taking it and you're making something, from that. And so there's a question of how would you apply the cost related to that juice? When in thinking of it, do you want to think of it as that juice that you use in the Rosé is essentially free because it's something that would have been completely gone down the drain, and thus it's not something that has any value to it at all. So you could say in that case, to make Rosé out of that, as long as I can price something above those marginal costs of bottling it and packaging it, it makes sense to take that juice instead of putting it in the drain and actually bottle it and sell it. On the other hand, you could say, I have this whole lot of Pinot Noir juice, and if I'm taking this juice and using it in Rosé, I'm going to apply those costs of the juice to the Rosé, and thus that lot of Pinot Noir is going to be less expensive because I'm taking some of that juice cost out of the Pinot Noir, and ultimately, from a cost accounting, that's probably the more correct way to do it because in fact there is cost to that juice, but it might give you an incorrect thought of whether you should make that Rosé or not, because you might not be able to sell that Rosé for the price that to cover that cost of that very premium Pinot Noir that you were starting with. And so it might seem like then you shouldn't bother, but truly, as long as you can exceed those marginal costs, it probably makes sense. So you'd want to, potentially be thinking of it almost in tandem, looking at those two lots together in trying to understand what you should do. I mean, I think that the idea of making, grappa, for example, from the skins too, is another use of something that's otherwise going to just be composted, I guess. And we don't do that so much here, but it's kind of the same idea of taking something that was otherwise not going to be used and finding a value from it.
Okay, so you're saying option 2 is probably the more accurate way to cost this out, but then what does the costing then tell you if you are applying it to both of those products or those SKUs?
Yeah, I think that the question that it's going to lead you to is, should I in fact make rosé from this juice, or should I let that juice just go down the drain? And so as long as you can justify those marginal costs, that probably makes sense, even though looking at the actual costing, it might not look like it's going to make sense for the rosé alone.
Okay. And would you apply this year over year or across the board, or what's like the best or the better answer in your opinion?
So I think from a GAAP accounting perspective, you need to be consistent in doing the same. You need to always be costing things out in the same fashion. And so I think that's what you need to do for your GAAP books. But in doing the analysis to understand what you should actually be doing more broadly, it might be a different analysis each year based upon the farming year that it was, based upon the market, what's happening. And so you're probably going to be taking you might potentially be taking a new look at that decision each year to see if it's still, if those assumptions still make sense, because you're going to be looking at the costing in a different way than just purely seeing what you have on your books.
Yeah, that makes sense. Based on yields, based on multiple factors that are sometimes out of our control when we're making wine. So
right.
That's great.
Right.
So another thing you mentioned was technical accounting versus managerial accounting. It's kind of a pivot here, but I wanted to bring it back up and see if you could explain this and when you would apply either approach.
Right. Sure. So I think this is a little bit like what we've been talking to, which is that there is an answer that is, a financial accounting answer, which is based on GAAP, and it's historical data. It's preparing financial statements. It's something that's being shared certainly with external users, and it is the balance sheet, income statement, cash flow statement, and it's something certainly we use all the time internally, but its purpose is more so about that historical record keeping, consistent with GAAP, and managerial accounting is more so what we've been talking about in terms of that more operational look at the data and understanding what the costs are. So, managerial accounting is essentially taking this information that we need for our internal, management decision making, planning, control purposes, and it's the forward looking data. It's what you use to do your budgeting and your forecasting and any of your ad hoc performance analyses and such. So it's really about that strategic and operational decision making, essentially. So when we're looking at things like what we were just talking about of determining whether we should make a particular bottle, whether it's going to be profitable for us, whether we can make it in a profitable fashion, whether we should make that rosé or not, we're looking at the data in a different way potentially than we were just purely from a GAAP accounting perspective.
Yeah, that makes sense. It's more of a high level, big picture approach to kind of what the business is telling you and ways to make decisions. Well, amazing. This has been brilliant. You are just a wealth of information. And I want to ask you, so now that, people know this, and if they want to better understand what their winery is currently doing, what would you suggest they do?
Well, I think it's just having this awareness that you can be looking at the data in different ways, depending on what questions you're trying to answer, and knowing that what you see there in QuickBooks or whatever your general ledger is, that is a take on what something like costing is telling you, but that there really are, if you're wanting to understand what you should do, there really are other ways that you can take that same data and repurpose it and look at it in different ways to help understand what the right operational decision is.
That's amazing. And can you share maybe a couple of resources that you lean on when you are needing answers in your role?
Sure. I mean, I think even just going back to kind of our earlier point is that there are plenty of actual experts out there, especially on the technical accounting side. You're, like I say, your Moss Adams, your BPM, and there are lots of experts out there as well on the managerial side, and certainly a lot of like the fractional firms and outsource firms are ones that see how many different wine businesses are doing things, and they probably can easily answer any of these questions based upon that broader perspective of what is actually happening. And also it just leads to sort of the idea of the personal networking that we all need to do, and this is an example of that, certainly. But our networks and asking when you're looking at something that is a little bit different or feels like it's not giving you quite the right answer, it's reaching out to people in your network and asking them how they're handling what they've seen. And I think that what InnoVint is doing and what you are doing here with the Punch Down is another great example of how to be tying some of these different options together in terms of pulling the experts and the other people around in the industry into one spot and making that iterative option of asking questions out to others and seeing what they're doing. So I think all of those that we can do to look to our broader community are really, really helpful. So.
That's lovely. And thank you for the kind plug of the Punch Down. We here, I'm always trying to find ways to bring more resources together and to connect more people to each other ultimately. So again, thank you so much, Frances. This has been Expert Talks, Cost Accounting Concepts. And we are, again, just so thankful for your knowledge and your time that you've shared with us today. So have a fantastic rest of your day, and we'll talk soon. Thank you.
Thanks so much.